everyone, Les here, Chief Analyst of BG Trading Australia, and I hope you are well. Today is 26th of August 2024, a busy week ahead with a lot of financial reports going to be released in the market this week. Today we had Kogan and Tyro and a few other ones. And tomorrow we have Zip, which we're going to be watching very closely. And then by the end of the week we have Appen. Now, this video is going to be about Appen because I've been asked to alter the day whether you should be buying Appen, and then all of a sudden the stock starts falling. I want to highlight this. We have locked 75% profit together with our VP members in Appen when we bought the stock around 60 cents. So we bought around 60 cents. Now, the reason why I wouldn't be looking at buying Appen now is just because it's too risky. So we had a target around right here at this hypothetical resistance level. It reached our target BGS20, also reached the long-term target, and now it has actually surpassed that. And then around $1.50 we had this very suspicious bearish engulfing here, which if you know a little bit about technical analysis, you know what I'm talking about. This is not a positive formation, especially when it is in high volume. However, being Appen itself, we can expect anything with high volatility and relatively low liquidity, although there has been very strong volumes on this stock over the last 30 days. Now, should we be buying this now or just wait to see what happens? My answer is very clear. You should just wait because we're already out of this stock. We had the target one around $1.10 here. That was the target one. It rallied further. And but look, we made 75% profit. So could we have made 150? Yes, we could. Does it hurt? Not as much as if you lose money. So I would say we're very pleased that we did this trade here. And we bought a technically discounted price where nobody really cared about the stock. I've been making videos about Appen as a potential buying opportunity. Nobody cares. And then what happened was we had this huge rally. The problem with steep rallies like this is that the fall is really sudden as well. And that's what could be a fall here. Ideally, what we want is a tight consolidation, which the stock moves sideways for a little bit, maybe a week or two, before making new highs. What we don't want is strong volumes on this distribution day here, making this bearish engulfing. You really got to be careful with this, and obviously what ideally you want to do is buying Appen again at technically discounted price, which should be just below those two lines or at those two lines or closest possible to those two lines, and which is currently sitting around 70 cents. Both lines are at 70 cents, so which is it should be a quite considerable fall here. But let's say if the Appen falls another 10% tomorrow, so we are talking about 10%. If it falls another 10% tomorrow, that will be down to $1.13. So here we go. We need another 20%, and that will be back into technically discounted price. So just be careful with this. I would look. We're very happy that we made the money. We've been watching, sometimes even doing a little bit intraday trades, but we don't think we should be touching this stock now. Okay, we shouldn't be touching this stock now. It is still bullish. It's still trading at the above. The candles are trading above the yellow line, which is the exponential moving average. It's still on uptrending momentum, as you can see, green candles on the Hekenach. We haven't seen the red candle yet, so that's positive, okay? But just watch out, just watch out. For me, because I'm out, I wouldn't be buying now. If you're holding, just keep holding as long as it doesn't fall on a large volumes again. So make sure if you hold, ask yourself, how much money I want to make on this position, and whether should be time to be selling, or are you gonna hold for long term? If I'm gonna hold for long term, what does the fundamentals need to look like? And this is bring us to analyze the fundamentals of this particular company. As I highlighted in the last video that I put, Appen has been improving its fundamentals. However, revenue is still low, is still down by 18% year on year. But we have significant improvements on the underlying EBITDA for this last period that we received here. So you can see like our huge losses on the EBITDA last year, pretty much around this time last year, and then it has been shrinking. Even we had some December month was positive EBITDA, so we want to see positive EBITDA. But the truth is still a company with a very weak fundamentals. Okay, so the hype is on generative AI, the service this company produces for the key players like Nvidia, Google, among any other clients. So yeah, just watch closely. Don't get overexposed if the stock is falling in the strong volume. All right, I will stay out until I either see very tight consolidation at the low volume, which means you want to see the stock moving a little bit low here, but at a very low volumes, and then start going up again, or if we see a considerable correction here, which brings Appen close to this so-called hypothetical support level, which was once a resistance, now is a support level. There's one here, and I would assume there's one around $1.20 as well, which was our $1.20 to $1.10, which was our target, the last target that we did. So look, I would be comfortable buying around 80 cents Appen once again. Obviously, there is a financial report coming this week. We don't know until we actually read the report. We have a fairly good idea what's going on with the business. We also have fairly good idea that there is Appen is going to be a net loss for this year, and I don't think it's going to be a net profit for the next year as well. But we want to look for key fundamental metrics such cash on the bank, so how much cash on the bank the company is doing, whether it's cash flow positive finally or still burning cash, and the outlook for FY25. So just keep close eye on this week financial report in order to make a decision for like a mid to long term. And remember, Appen is the company that has few very large accounts, which means if they lose one client, one major client, then there will be a huge material impact on the fundamentals, on the finances of this company. Obviously, they're increasing now revenue out of businesses in China, but still, it's a high-risk company for the nature of the business model based on a few key accounts, rather than several small accounts that if you lose one or two, it doesn't really impact negatively as if you lose one account, as this company did as Google last year, which ended up compromising 30% of its revenue. So just watch out. There is probably far less risk opportunities out there, and if you made the money, man, be happy, and don't get annoyed with yourself because you sold earlier. Just be grateful. You already made money. So, okay. Anyway, let us know what you think about Appen. Are you still holding? Gonna buy back? Are you going to sell? You're gonna wait for the report? And yeah, share the comments right here. And as soon as the report comes up, I will do another comprehensive analysis based on full year results for FY24 and a prospect for FY25 as well. But probably not gonna happen till next week. See you in the next video. Bye.